So it sounds like no on the pre-approval is not necessarily no forever, but
Yeah.
it's a no today. Okay, so if things aren't where you need to be financially today, you still have hope in the future. Now, let's say I don't get pre-approved today, or not pre-approved at the level that I want to get pre-approved to. So maybe I'm hoping to be able to afford a larger house or something that's a little more expensive. How long should I wait? I know my answer might be it depends, but if I'm told no today, um, and I'm given some corrective actions, maybe I can work on my credit score or these other things. How long should I wait before I apply again? Is there a set time frame, or kind of what advice do you have there?
Yeah, I would say it does. It definitely depends, and I wouldn't wait. And in fact, a lot of times you don't have to necessarily close the chapter on the pre-approval and say, "Oh, well, see you later." A lot of times it's just a matter of like checking back in. So if I am your loan officer and I've said, "Hey," we need to really pay off this one debt because it just isn't, it's not in the cards. It's not going to, help you get to the home purchase price that you're looking to do. And we kind of think, okay, well, I know I have this coming up, maybe my tax refund's coming in. Then we'll just touch base and say, hey, Angie, I got that paid off. And it's like, awesome. Let's go ahead. Let's rerun. Let's update the credit to show that paid off, et cetera. And then we can kind of just keep it moving. So it's not a matter of like, hey, go do this thing on your own. I really would encourage you to stay in touch with your loan team and make sure that you're keeping them updated on how you're progressing on that plan, because it will make all the difference. And you'll feel more so like, I don't have to start over. It was always really important to me to understand what your goals are and how I can help you achieve those goals. And so that's not just a one and done, see you later, good luck. I feel like it's a relationship. And so look for someone that you feel comfortable with so that you can kind of extend that relationship. If your situation means that like, hey, you're not pre-approved right now, but you've got a few things to work on.
That's good. And I like the idea of it being a relationship so that you have something to work toward, but you have somebody who's kind of has a little vested interest in
Mhm.
helping you, and they're going to coach you along the way. And kind of having that cheerleader can be motivating, I think. Now, on the flip side, we're talking about working toward being approved. Are there situations where you get pre approval today? Maybe you didn't buy a house right away, and some time goes by. Now you're ready to go buy that house or make an offer. How much time passes before you have to look at maybe getting pre-approved again? Can you lose that pre-approval? What happens in those situations where something might change in between the time you were originally approved and when you're ready to actually make that purchase?
Definitely. I don't know if you've looked at the stock market lately or
Yeah,
rates lately,
sure. Yeah.
but the rates can really impact that. So if we see a big swing one way or the other, it can either boost your amount, your purchasing power, or it can limit it. So rates in general can make a big difference there. If you've had some changes in your income, that could change. Also, market prices could change. You might be pre-approved at 350, and by the time you're ready to buy, that same house is now going for much more, and it's a little out of reach. So it's a good idea just to keep checking in, when you kind of get there along the way, and that way you're locked and loaded and you're ready to go. That pre-approval is your power, is your purchasing power, and certain things can influence it. And so it's just good communication along the way.
Yeah. So you mentioned interest rates. Now, interest rates can change on a day-to-day basis, so that can influence how much you can afford, obviously.
Mhm.
And that's something that we don't control. But there are things we do control. We can control sometimes our income. And sometimes you might be like in the military, you might have a set income. But there are other things you can control, such as your credit score. Now, credit score is going to impact part of the interest rates we get as well. So, for example, if your credit score is higher, you'll probably qualify on the lower tier of whatever prevailing rates are. And if your credit score is lower, you may have to pay a slightly higher interest rate. Can we talk a little bit about the importance of credit score and some of the things that we can do as buyers to ensure that we are best prepared to buy a home?
Yeah, yeah, you bet. So you're exactly right. The higher your credit score, the lower the rate you're going to qualify for, the more options you're going to have available. And so when it comes to credit, some things to keep in mind would be to keep your balances low. We don't want you to stop using them altogether, but if you can keep keep them below 50% of what your credit limit is, that's going to help your credit score overall. Obviously, make the payments on time.
Yeah.
Don't be late, right? And don't miss any. So be careful. I've seen just hiccups happen like, oh man, I had that set up in an auto payment and maybe my card got compromised, my debit card got compromised, and suddenly I missed a payment, didn't even realize it. So just being very, very diligent in making sure that all of your finances are in line, you're making everything on time. Double check how those automatic payments are coming out, because I've seen that trip people up before. Could be very detrimental. So you want to keep your balances low, you want to pay everything on time, and then you don't want to have a ton of new accounts opened, because hard inquiries or companies looking at your credit would indicate that you're seeking credit. And so if you're opening up a lot of new accounts, that can actually drive your score down as well. So if you're getting kind of prepared to either get pre-approved or stay pre-approved, I would say limit the number of new cards. When you're at the department store and they offer you this great rate because you can get 20% off your purchase, like, don't do that, right? If you're looking to buy a house, just avoid doing that yet. You'll think you'll appreciate that, because it could really hurt that credit score unintentionally.
And kind of segue on top of that, if you're looking at buying a new house, probably want to hold off on other major purchases. Like, don't go buy a new car, for example, because now you're increasing your monthly payments. For example, you might be taking on more debt. So it might be better to wait on that new car purchase until you know what your budget's going to look like after you buy a house.
100%.
Probably sounds like on the right path.